you plan your affair, properly. So let's look at tax avoidance will be used to describe every attempt by legal means to prevent or reduce tax liability which would otherwise be incurred, or by taking advantage of some provisions or lack of provision of law. For instance, donation for COVID-19. Government say that donations for, now, if you donate so a government approved fund, whether at the state or federal level, then it is tax deductible. Then you now go and donate everything to a fund that you created yourself. You just went to create, you form an NGO, you donate it to your NGO, and you are the owner of the NGO. In your own, you have a PL, a limited liability company. You've given donation to that NGO. So the NGO collects the money, but your limited liability company wants to claim all the donation as expenses. Why? Because the government say that all donations are tax deductible. At the end of the day, there's no taxable profit from that company. And that's why the companies now say, oh, because government knows that people want to abuse that clause, they now cap it that your donation should not be more than 10% of your accessible profits after deducting all other expenses. That's an anti-avoidance provision. Let's assume that there's no anti-avoidance provision. People want to avoid tax by donating, very well. You think they are very generous, but because they don't want to pay tax, that's why they form this NGO and they get approval from the government. They got government back and they're donating to their selves. So in that case, people will want to avoid tax with that. So tax avoidance is not also, although you cannot blame the person cannot be charged to court, but it's not encouraged. The best thing is to plan your affairs. What's the government looking at? Is government encouraging charity? Is it encouraging agriculture? Is it encouraging digital space? That's creativity. Is it what? Looking at the tax law, you will find the interest of the government. How will you position your business to tap from the interest, what government is focusing on? So if government is focusing on agriculture and you have also interest in agriculture, go into agriculture. If government is focusing into hospitality, music and lights, you go into music. You set up your record label. If government is focusing on tourism, you go into tourism. Maybe the tax law favors tourists. I mean, those in the hospitality industry. If government is encouraging manufacturing, you go into manufacturing. So these are what we call tax planning because you are working in line with the spirit of the law. So you are not taking advantage of the weakness in the law. So any plan in which, though done strictly according to legal requirement, defeats the basic intention of the legislature behind the statute could be termed tax avoidance. Okay, so tax planning is the best, and okay, followed by tax avoidance. Then the one that is not good at all is tax evasion. Earlier, tax avoidance was considered completely legitimate because it's within the law, but at present, it may be illegitimate in certain situations. Like in the judgment of the Supreme Court in McDowell's case, now the tax avoidance has been considered as heinous as tax evasion and a crime against society. Most of the amendments are now aimed to curbing practice of tax avoidance. So that's why we see think capitalization rule. We have transfer pricing rule just to ensure that that people are not just avoiding tax. Because if you just leave taxpayer, you know, consultants, we can be looking. Oh, we see opportunity here, you know. So because of that, we have anti-tax avoidance rules. Uh, of course, when it comes to when it comes to holding company structure tax planning or global tax planning, a lot of company can, to teach their company in territories of, you know, lower taxes. Like I will give you some few instances. So basically, we look at tax avoidance as that and tax planning as very good. You know, aggressive tax planning would lead to tax avoidance. Okay, but tax evasion is not good. So, tax planning I'll be talking about here will be setting up your businesses. So, when you are doing tax planning, it's really good at the beginning. When you are setting up your business, what's the objective of your business? What's the structure of the business? What's the location of your business? So, if you want to do proper tax planning, you should do it at the beginning when you even conceive the name of the business. Okay, so that is uh, that is what to do in setting up tax planning. Okay, just a minute, please. So basically, I'm trying to admit into the group and also respond to some question. So uh, so basically, I'll be emphasizing on setting up your business. Before setting a business, we should analyze the tax provision and incentive applicable to that. This unit focus on tax planning tools to setting up the business organization. So basically, before you set up a business, you look at the incentives. Oh, you are going into fund management, you are going into real estate, you are going into agriculture, going into tourism, into buying and selling, you need to check the tax law to see those incentives, whether they are enough for you or not. See those things, whether you can, there are a lot of tax incentive in that sector. So it's very key. Okay, setting up a business within the scope of the relevant tax law is a particular point to consider the purpose of tax plan. It's different from commencement of business. So you should set, it's not when you commence your business you start talking about tax planning. No, set your business properly. Whether is it a business name, is it a partnership, is it a limited liability company, is it an holding company structure? So these are areas how you could form set up your business. Okay, so when it comes to tax planning, the first aspect of setting up a new business is deciding the form of organization or ownership pattern. Tax liability is an important consideration guiding the choice of legal form of business organization. In some circumstances, however, this consideration is of no significance. For example, large business is generally compelled to organize itself in form of a company, as this form of organization makes it possible to raise large amount of money. So there are some businesses that are large. You cannot do business name. Maybe you want to go into banking. You cannot do business name for that. You must be a limited liability company. Okay, so there are some businesses that you must organize yourself as a limited liability company. Otherwise, you'll be able to raise funds to run such business. So the same thing, similarly, retail business of small size can only be economically operated as proprietorship or partnership firm. When there is freedom of choice, taxation becomes an important consideration. There are some business that are very small that maybe someone is doing into some petty trades of buying and selling of, it could be books, just not in large quantity. So he may want to do a business name. He may not want to go through the rigorous process of incorporating a limited liability company, with the rules and regulation governing company. Apart from tax, companies are exposed to more rules generally than business name. So you may want to start with, business name easily because of the small nature. But if you have the opportunity to jog between setting it as a big firm, limited, or as a business name, then this tax planning uh, discussion comes into play. So we'll be looking at the various legal structure in Nigeria and the advantages of them in terms of tax. So if you want to set up a business name, as a business name, you see that you have fewer tax exposure. So a business name, as we know, is it ends with like Ade Ventures. It could be your name and co, and it could be a partnership business, but business name is the simplest, or yeah, the first when it comes to the first stage when it comes to the simplest legal structure for a startup. Okay, so you could want to do a business name. So what are the benefits of doing a business name? Few number of tax exposure. Business name are exposed to four types of tax: personal income tax, business premises permits, payee, development levy. And if you don't have any staff, you don't need to do payee deduction if you are the only one running your business. Those